everybody. Welcome back to the Mouthy Money podcast. I am joined, as ever, by my co-host, Chris Tuite, who is head of consumer finance at MRM. Chris, good morning. Hello.
Morning, Ed. How you doing?
Yeah, good, thank you. I am having a very peaceful Monday morning, not looking at the news, etc. How about you?
I made the mistake of looking at the news and was reading a lot of it over the weekend. So
Getting all those, what's the brain chemical called where you get phone notifications and it makes you
is
want to check it? Is it
cortisol, is it?
or
Cortisol or
dopamine?
dopamine? One of those. One of those is good and one of those is bad. Probably both in too much quantity, let's be honest.
Right.
But yeah, it's been quite a weekend, isn't it?
So we're already prattling on about it, but what are we talking about? What's going on? Because there's one thing going on at the moment in the world of money, and it's not good, right?
No, it's Trump and the tariffs and the fallout from Liberation Day. Although I have
So
just seen the FT called it Liquidation Day, which means they're taking a slightly different take on it. But anyway, there we go. Go on, Ed.
no, well, yeah, that's the long and the short of it, right? When did we have Liberation Day? It was
2nd of April, wasn't it? Was it the 3rd?
yeah. It was last week, basically. We had some kind of sort of reaction on in investment markets, in the sort of tail end of last week. For whatever reason, Monday morning seems to have been the morning when everybody's woken up and decided to basically have an enormous meltdown. Everything looking pretty red at the moment. You've got FTSE down, I think it was something like 4% at one point. I mean, individual stocks are all over the place. And it's bad news in lots of different areas. I mean, things, even stuff like bonds. So historically bonds, which are, it's a form of debt that the government sells, companies sell to investors, which pays an interest premium, etc. Supposedly supposed to be like a safe haven when things like equities, which is the stock market for companies and that kind of stuff, goes badly. Not really safe from the issues at the moment, though, and that correlation has been a problem ever since the pandemic. Actually, the fact. And that's driving stuff like gold up. And I saw over the weekend that apparently young people are buying gold, which is very exciting.
Yeah.
Or not, if you really understand the rationale behind it. I don't know, Chris, I mean, that's the kind of what's going on today. Everything's in a bit of a mess. Blood in the streets, as a friend calls it. What's your take on it? How are you feeling? Have you looked at your SIP? That's the
I
most important
have.
thing.
This is the thing. I do have to. I feel like I need to do this. Right, we've talked before about my investment strategy on the whole is long term, right? So things are going to go up and down, and we're going to have these oscillations, and there's going to be crises and all that rest of it. But I've got a long term time horizon, which means I'm putting my money in, not quite set and forget because I'm checking it regularly, but also kind of interested in what's happening and why it's happening and what the impact of that is in the cortisol side of my brain, shall we say, as in, what is it that's kind of going through my mind when I see, as you called it, blood on the streets everywhere, red all over the portfolio, huge numbers falling down. And something that kick-started this was I've got a WhatsApp chat with some of my school friends, and we, occasionally throw in the odd conversation around what's going on with investing and all the rest of it. And he dropped me a line and said, look, I know none of you are financial advisors because I'm not, dear listeners, we all know, but I've got some money in an ISA, which I need in 6 months' time. What should I do? And that sort of crystallized it for me a little bit, which was, right, well, I've got my JISAs for my girls, which have, 16-year time horizon. I've got my SIP, which is probably 20 plus. So I can kind of watch this with a morbid curiosity and a bit of disappointment and wondering whether I should have moved some investments around or how I want to position my portfolio in the future. But my sort of response to him was, okay, well, there's a couple of things at play here. One is, how much do you need? And I think his thing was, do I take it out now or do we think it might climb back up again? My response was, do you need it now? If so, how much money do you need? Therefore, make sure you've got enough for what you need, first and foremost. So maybe don't take the risk. And then secondly is, how are you going to feel about it if you leave the money in for a couple of months longer until you're closer to when you need it, and the market does recover a little bit and your losses aren't quite as pronounced, or heaven knows you might go back into sort of positive territory again? Or the counter of that, how are you going to feel if markets nosedive again and you lose money and you've still got a bit of headroom for the money that you need? So it was more going back to the conversation we had with Dan Haylett around sort of how do you feel about the decision? Make a decision based on what you need, what the information you have at the time is, based on, and also base some of your emotional thought process around it and how you're going to feel about it after the fact, and then make a decision based on good faith on that and have don't look back kind of thing. So I was quite interested in his take on it, and that he seemed happy with that. And I was like, okay, well that's
Yeah.
good. Yeah.
So
So
the
that's what
problem,
I've
I
been.
mean, the problem, look, the practical problem here that normal people face, and I think your friend's situation illustrates it nicely, is that when markets go down, because they do go down, the methodology is that they're supposed to go up steadily over a long period of time. And when they go do down, it's short and sharp, and you build back from there. The problem is when you're in a situation where if you need the money like that, now or in 6 months, and you think, okay, everything's going sideways, so I need to step off the treadmill, so to speak. The big problem here is you crystallize loss, and crystallizing loss is really damaging, because making back the percentage that you've lost is much harder when you step out at a certain level. And actually, if you're planning and preparing for a long-term plan, the reason why we don't worry about the dips is because when the market goes down and you're paying in a monthly amount, be it through an ISA or a pension, you've suddenly gone from paying, say, £100 for a unit of an investment fund to paying £75 for that fund, or £80. You're suddenly getting the same thing for a big discount. We can talk about things like pound cost averaging. Everybody talks about pound cost averaging, but you're smoothing out the rough basically by buying stuff when it's cheap. And you'll see seasoned investors talk about buying opportunities and this kind of thing all the time. Now, that again, that kind of buying opportunity is very short termist again, because you're trying to make a buck on the market that way. So having that steady pay in monthly plan is really important. And I will say, and I don't want to do down your friend here, but generally, if you're invested in this way, that money shouldn't be money that you might need to touch in 6 months or even 5 years, really. Um, what's really essential here is having a short-term cash fund, and that's especially relevant for people who are older as well, where they might be more reliant on a retirement income from a pension. Is actually having a bit of cash flow can stop you having to sell something out of your pension at the wrong moment. It can be really important. So that's an unfortunate situation, I'd say. For him, hopefully the sums of money we're talking about aren't huge. But yeah, it's, I think, important that if you're invested, it's for stuff that you don't need to touch, basically. That's what makes a lot of time the pension such a good vehicle in that sense, because you can't touch it.
Yeah,
Really.
in fairness to him, I think he's aware of the kind of long term, short term thing. I think maybe this, I'm not quite sure what the specific situations are around this, but this one's obviously slipped through the net for some reason. The pound cost averaging thing is something that's definitely, I'm aware of that at the moment. That's the first thing that popped in my head when I saw this, which is, well, I'm going to get a bit more value out of next month's contributions, aren't I? Because again, I've got that long term horizon. I did have a conversation with Tanya. We were doing the washing up on Saturday, and we were like, well, if things have gone to hell in a handcart or blood on the streets, as you said, Ed, do I want to redirect something out of my cash ISA and maybe get some more value? And you're right there about kind of making a buck on the market. And instinctively, I'm like, no, my plan is steady monthly contributions that, as you say, smooth out the volatility and over a period of time, hopefully deliver out performance. So uh, I've gone against that. But we did have the conversation, which is quite interesting, which was that kind of contrarian view, which is, well, maybe there's more value for us here. Maybe we should see if we can do that. So I didn't panic per se. I have to say, I did look at my pension, and it's been stuck around a certain level now since COVID. And it was just like, oh, snakes and ladders, we're down here again, kind of thing. And again, it's kind of bizarre. You think about it like, well, I'm doing this saving every month, and there's supposed to have been these movements in the market. And yet somehow I find myself back to, back to square one, if you like, sliding back down the snake. And it's not that, of course, but I do get the sense that in recent years anyway, that kind of steady upward trajectory has been harder for me to see. Actually, maybe I need to have a look at the cold hard numbers and reassure myself of that fact. But it feels like it's been one step forward, one step back, one step forward, one step back recently. So, hopefully the end of globalization, as Keir Starmer is likely to call it later today, means that we might end up with another different direction, which might see my portfolio zoom off. We'll see.
Yeah, so I mean, I think I get acute when you and I have these discussions. I get acutely aware of the fact that you do seem to look at your
I
do.
do, yeah, yeah, well, I do.
And I think obviously we have a different approach to it in that sense. But I mean, I think um, I mean, I don't want to start blowing my own trumpet here, but I haven't looked at
Far
my
away, Ed.
SIP. I haven't looked at my SIP. I haven't looked at my
Not at
SIP
all. Not at all.
I haven't looked not in about 6 months. No.
Not even curious now as to how much has been wiped off and
No,
all that. You know.
no, absolutely not. And actually,
No?
one of the best things about my work, I've got two. I've got a SIP, which tells me in percentage terms, how I'm doing.
Mhm.
Um, the one of the nicest thing I like about my workplace pension is they're really, really vague about how well your portfolio is doing, and actually to figure out the percentage terms of how much they give you like a pounds and pence view of you've contributed this much and this is how much your pot is worth. And it's like, okay, so the difference between those two figures is how much I've made in the market. They don't even really give you a clear percentage figure. So, and I think that's actually, for me, I think that's a really good bit of behavioral obfuscation, let's call it, because they don't want people looking at that percentage going, oh, God blimey, it's down 5% or something like that, or down 10% or whatever. I don't want to know that. I just want to know this is how much I've put in and this is how much it's worth. Obviously, I can infer that one figure should be bigger than the other, but I think considering I've been putting into that pension now for more than 5 years, things would have to be absolutely disastrous for the contribution figure to be bigger than the value figure. We would have to be in proper apocalypse, because you're talking about wiping out 5 years of growth there, kind of
Mhm.
thing.
Mhm.
So no, I don't look at it, and I don't get. This is the one thing which I don't do, is I don't get panicky about markets. In fact, I haven't really looked at it. I only looked at it just so I could get a vague idea of what was happening before we did this podcast, basically. Um, the thing that concerns me is that the media absolutely howls about how important this stuff and how big a deal it is, and they are all pressing that dopamine cortisol button in everybody's heads and trying to just kick up the fear narrative, and I really dislike that, and I do think it's not good. People need to have long-term plans, and they need to have that kind of sense that what they're doing is the right thing.
Yeah,
you know
I don't, I slightly disagree with that observation point, because I feel like
okay.
that's slight, I want the information to be able to make the plan. So, I get frustrated. A similar experience with my workplace pension. I haven't even checked that because the login's so painful. But, but if I did, I'd want
That's a
to,
bit of that's behavioral obfuscation, Chris,
that
making it
that
hard to
is
log in and look at
kind of seed the
it.
bloody thing. Yeah, well, maybe that might work out well in the end. Who knows? Like I said, I've done absolutely nothing in terms of my funds or anything else like that. The only thing it's done made me think about is, do I want to put more money in, actually? And the other flip side to that is, I think we decide what that was. But the other thing is, I've been thinking a while about rebalancing my portfolio. It's like, okay, I need to, and I think if the global economic picture is going to change markedly, then that's maybe not a bad idea. But what I don't want to do is to lock in any losses. So I probably should have done that 6 months ago. I did a little bit of that, actually, funnily enough, on my workplace pension, where I went in and said, I'm not happy with just sitting in the default fund here. I want a little bit more risk, and I want to spread it across a wider geographical area. So I feel quite confident that I've got, however this tariff thing is going to play out, if it's based on a geographical basis, which is how I kind of split up the world rather than the kind of sectors, the various indices across the globe, then hopefully there should be some balance in there. Although I think I, maybe had a little bit more in America, which means I might lose a little bit more than I anticipated, but it was spread, so that's good. So yeah, I think those are the only two things that have really kind of come to fruition, and that sort of sense of, and it's tied into the other stuff we talked about with my pension, where am I saving it? This is the cortisol button you talked about. Am I saving enough? Will I ever get there? I just seem stuck around this mark that I can't seem to get over. And actually, over time, we will push through that, I'm sure. I've just got to keep doing the right thing, which is the pound cost averaging thing. Make sure I'm contributing regularly. Don't panic. But there are people who are closer to retirement who this could have a significant impact on. These things do matter. I don't want to suggest that they don't. It just depends where you are in the journey. And at the
Yeah.
moment, we're in a, the midpoint of that, I suppose you would say.
Yeah, look, I mean, at this point, I'm going to give the usual disclaimer that we're not dishing out financial
No.
advice here. I think particularly people who are in a situation who might be coming up to retirement, or, thinking about it, or even in that period where they're like kind of looking at drawing down and that kind of thing. Anybody who's got kind of significant, it needs to be very careful at points of time like this. potentially consider speaking to an advisor about the best approach. I think that is essential to with pensions, which can be on the tax side of things quite complicated. But I will stress that I think that there are ways to manage it. An advisor will be able to help with that kind of thing. People who want to go down an independent route need to be careful and need to do their research and understand the implications of their decisions. So that is important.
Yeah, the
Um,
historical context is important here as well, Ed, isn't it? In terms of, I mean, it sounds like it's sliding further today, so there's more road to run on this. But if you're looking at the indices, how much did we lose it in COVID? It was huge
Oh,
numbers.
it
Like I
was
went
huge numbers, but then all bounced
compared to
back.
exactly, exactly compared to the last couple of days, it's not comparable
Yeah,
really. Although, you know,
yeah.
mm,
You mentioned Keir Starmer there talking about the end of globalization. It's worth us just kind of looking at the context slightly. Obviously, the markets are reacting now because I think they kind of underestimated just how drastic this entire situation was going to be, and it's literally stoked the kind of Churchillian, displays of rhetoric from people like Keir Starmer, who he's at the time of our recording hasn't given his speech yet. He's due to give one where he's basically calling an end to globalization. It has I mean, from a historic perspective here, it has the kind of sends the same sort of chills down my spine that Winston Churchill's an Iron Curtain has descended on across Central Europe sort of speech gives. We're at a marking point here. Obviously COVID was bad and all this kind of stuff. And that was all just a big mess. But, globalization as a concept is something that we've lived with for what? More than 40 years now. We're talking all the way back to the Big Bang and Reagan and Thatcher and even the end of the kind of the Nixon shock of the 70s and fundamental changes to the global economy. Donald Trump is really, I mean, he's blowing it up. Like, there's no kind of, other way to describe it. He's fundamentally changing the game. And there's so much unknown at this point. Well, actually, that's not fair. What we know is that putting tariffs on other countries is bad. They did it during the 1930s and it turned a massive recession into a depression. Smoot Hawley, I think it was called, if anybody wants to look that up. Uh, I think, there's a lot to be discussed, shall we say, about the opportunities for a country like the UK now, considering, we had all the kind of Brexiteers coming out of the woodwork saying, excuse me, guys, this is why Brexit was a good idea and all this kind of stuff.
that was part of the plan, was it?
Yeah. Oh no, we saw it all coming.
Of
This
course you
is
did. Yeah.
exactly it's all coming together, I think was the meme that I shared with you. Oh wait, did I share it with you? I can't remember. Anyway, I think all of this stuff matters and it is going to have an impact on people's livelihoods. It's going to have an impact on the economy. It is going to, it's going to cause all sorts of trouble. And then this is even before we talk about the fact that, Rachel Reeves was having issues with making the figures add up 2 weeks ago. Those calculations already look like they're going to have to go in the bin because of all sorts of mad stuff that's going on here. A lot of the discussion is, Keir Starmer, they're basically going to double down on the problem and be like, how the hell do we make a good thing out of this kind of thing? And that does, to me, that indicates that they're going to try and arbitrage their way out of. If you look, in raw terms, the EU here has been slapped with 20% tariffs and we've got 10% tariffs. That does present an opportunity for the UK to say, if you guys come and base yourselves in London instead of Paris or Frankfurt, actually you're going to get away with a bit more. Also, I will inject a little bit of hope into this in that the UK is a very service-based economy. So this is a not subject to tariffs, import tariffs. And also, they are having ongoing discussions about a trade deal with the US and whatever that looks like. So I think there are probably reasons to be hopeful. I think we are definitely we've crossed, I mean, to quote another historical phrase here, because I love a historical phrase, Chris. We have crossed the Rubicon, I feel like in the past 2 weeks, and that is pretty extraordinary to be living through.
Yeah,
And it
I find
remains to be seen. Sorry, go on.
no, it's fine. I find trying to find some coherence in it before. I read an interesting piece. I think you might have shared it with me actually about. You said that tariffs are not a good thing. Well, playing devil's advocate for a minute, the idea of reindustrialization, and the fact that I think South Korea and Japan did this in a post-war era where um, they slapped a particular, I suppose you'd call it fence post tariffs that meant that they could reignite their domestic markets and turn them into, put preference on particular things when it came to technology and all that kind of good stuff, which has stood those countries in good stead. It became a central pillar to their kind of future industrial and economic well-being. My concern with that is turning the clock back. Um, it's nostalgia. It's nostalgia becoming actual economic policy, which is we're just going to start building cars again. Okay, do we need more cars? Um, Particularly in light of climate issues, which I know have kind of fallen by the wayside, which but are probably going to roar back in some way, shape, or form as that becomes more pressing an issue. If you want to reindustrialize, what are you reindustrializing? And we talked before this recording, but actually about the idea of the meme you talked about where you and I can knock up a PowerPoint in 2 hours, but actually what we need to do is work out how to build the toaster. It's like, well, do we? I mean, it seems to have been done with a view of, look, we just need to change this and let everything fall where they may. And actually, there's no coherent 10, 15, 20-year plan about that protectionism is actually protecting and how that's central to what they need to be in the future. It just seems like it's doing something for doing something's sake, which is always a little bit concerning. I'd rather there was
So
more thought behind it, but
yeah, I think part of the issue here on the tariff thing is you have to look at what kind of country is implementing it. So if you think about a country like the US, which is implementing tariffs, the US has the benefit of a few things. They've got a lot of empty space that still needs to be building into, so they can create a lot of economic output by just doing things locally. It's still, the quote that the stat that I think is probably made up, but kind of illustrates it is generally speaking is that like I think the US is still less urbanized than the most of the African continent or something like that.
wow,
Like
okay.
it has you don't realize it about America, but it has enormous empty spaces in it still. And actually, when you go to the US, and I've been to the US years ago now, you kind of suddenly realize you go to places like Colorado and stuff, you drive for hours and there's absolutely nothing other than fields, kind of thing. The next thing is the US is really resource rich, so they have their own oil, they've got gas, they've got metals. Most of what they need, they have internally. They have to import weird stuff like certain metals and stuff like that for like making phones or something. But you're getting into quite niche stuff, like the really serious stuff, like that runs an economy, oil and steel and all those kind of good old fashioned, industrial materials. They've got a lot of it. So the jeopardy for them really, it's dialed down in that sense with tariffs because companies can acquire stuff locally. Whereas a country like the UK, we don't have that kind of stuff and we don't have food security. We have to import food. So if the situation is that the US can realign its economy to become much more self-reliant because it has the resources to do that. Whereas the UK, if we slap tariffs on food and, other major imports like oil and stuff like that, we'd be in be in big trouble immediately. And that's why I don't think Keir Starmer would ever even go for it. They understand that. We have to play the free trade game because we need to import stuff. It's irrelevant having a conversation about whether we need to reshore things and industrialization, that kind of stuff. The problem is that we are never going to be better than other countries at building toasters. Other countries are going to do it for cheaper and so we need to be good at other things that other countries are not good at. And that's how free trade is supposed to work. And functionally for the past 80 years since the Second World War, that is how it has worked. The problem is that the US has suddenly realized we're the ones underpinning it with our currency. We're the ones underpinning it with our security guarantees and vast spending on naval industrial complex and this kind of thing. And we don't want to do it anymore. And that's, who is going to do it, and they need to solve that problem. I think is fundamentally. Uh, Go on.
No, yeah, no, I completely. I think you're completely right about this UK's position in this, and no, we're not an industrial heartland in this country, and like you said, we're not going to be better at many other places at building toasters. But going back to your point of optimism around being a service based economy, that could help in an increasingly, I was going to say interconnected, but it's kind of less connected but more complicated world, which is, funnily enough, that's what they used to say about globalization. Those, all those kind of supply chains made it more complicated. And there is a thing around security here and about thinking about security, and things like energy security and all those kind of things need to be a priority. Food security, things you touched on there. So that's where you kind of get into the fact that one of the benefits of globalization has been greater willingness to cooperate, because it was in everybody's interests, and actually that may have stopped open conflict breaking out on certain issues. That's where I think a lot of this insecurity comes from, where you're like, well, actually there's more chance of countries going into becoming openly hostile and arguing with each other, and countries that you would historically consider to be incredibly friendly, the likes of Canada and the US is a good example there. So yeah, I think Britain's got to skirt a fine line on this, and it also sits geographically in a strange place, but sitting between the EU and the European Union, and I saw that Rachel Reeves is going to try and strike a deal with India, and there's going to be a lot more of that kind of having to go out and speak to other countries directly and building up different types of economic alliances based on what you need and all that kind of thing. So
I think
you add into that. Sorry, yeah, just one more thing. When you add
no,
into that,
yeah, go on.
there's loads of uncertainty around that, and then you add into the pace of technological change around things like AI and how that's going to be brought in. I think it's a step back rather than a step forward, the tariffs thing, but what it does do is give you an opportunity to think, right, okay, new playing fields. How do you succeed within that? Unfortunately, it just seems like most people have been caught by surprise by this a little bit, and there hasn't been that level of coherent thought. And what we might need to do is go through a painful few years while everybody readjusts, and
Yeah.
readjusts with all these kind of technological advances and different. The world is, we're not in the 1930s anymore. We're nearly in the 2030s. So how does that play into what the future looks like here, and how painful is that going to be? That's my kind of concern. But anyway, sorry.
No, I think you're right. But I think one of the fundamental things that's going to happen in the UK now, more specifically, is I think some of the more luxurious ideas and policies that we have are going to start having to be um, uh, cast off, and I think that there's going to be a reckoning with certain things. Now, whether we want to go into the detail on what some of those luxury policies are, perhaps not. But spending on certain areas, such as state pension, I think
Here we
probably
go.
currently.
Who had 28 minutes in the podcast for Ed to get on his state pension hobby? Or okay,
I
yeah.
don't want to vote. No, but the other stuff is going to be things. There's going to be stuff like net zero, which is obviously a big thing, and this is a very hot button political problem that parties like Reform are starting to stick their finger in the wound of. Is can we genuinely afford to have a green economy when we've got oil offshore, we've got gas underground, and we can't rely on America or anybody else to be delivering this stuff to us? Sure, we want to deliver that green economy, but at the moment things are looking a bit sketchy. So is it, can we, energy security and things like that really matters, and being able to run industry or the economy in general on cheap energy is quite important. So can we make that policy a reality in the next 10 years when the uncertainty is so high, kind of thing? I think we'll start seeing much bigger questions about that. And then, yeah, other places, I don't know. I mean, I think there's just going to be a lot of the world. There's going to be a lot more real politic in the world. There's just a lot more like we have to do this because we have to, not because, we want to anymore. And you see that with some of the policy choices about defense and stuff like that, which is not natural territory for the Labour Party, but they seem to understand, to their credit, that some of the stuff just has to happen now. Like we're no longer in the realm of making happily just kind of ticking along. The world is going to change, and you've got to get with the program.
I think
So
the
what does
backlash
it? Yeah, go on.
the backlash against globalization as well. We have to touch on that. This hasn't come out of anywhere. This is
Yeah,
Trump's base. This is Brexit. It hasn't worked for a lot of people who are on sort of lower incomes and lower skilled labor force in these countries. And so there's a big question to be asked. You mentioned it goes all the way back to Nixon. I would argue that a lot of the neoliberal policy that emanated from there through to Thatcher, Reagan, and everything else like that did not pay enough account of that. And that has come home to roost in terms of what we're seeing now. So there's broader questions about, okay, well, if we're not going to be making toasters in this country, how are you going to make sure that people are employed gainfully in a good way? That I'm kind of making the same circular point I made earlier. Those people can't be ignored, and that is traditional Labour politics, and perhaps that should have been addressed more readily before by others, and we wouldn't find ourselves with this kind of political backlash where people are like, can we just turn the clock back to something that looks a little bit more like what my father had and his father had and my mother had and her mother had.
I think that's the nub of the issue, right? Is that, and this is the one. This is, and I've talked about this before. It's the one dog in this fight that hasn't barked is unemployment.
Mm.
And that is the one thing that politicians will never tell you, but are secretly all absolutely terrified of. Because if you look at history, the one thing that tears countries apart, not just economies, is unemployment. When you end up with a lot of mainly young, angry men out of work, that's what tends to lead to, 1917 style Bolshevik revolutions and that kind of thing. And no, I'm sorry, I'm
Storming the
making light of
barricades.
it. Well, burning the Reichstag and all that kind of stuff.
Yeah,
It's
yeah,
really
yeah.
serious stuff.
Yeah, no, of course, yeah.
People they are terrified of unemployment. They will do anything to prevent high levels of unemployment because the moment it starts happening, that's when things start really, really going south. We're not at that point yet, and they need to figure out what it is to do. But that point that you make, though, is that's what we need to figure out. We need to figure out what everybody's going to do with their time and how it's going to work. And things are okay at the moment, but the moment that unemployed dog starts barking, that's when I think things are really, really. Then we're really in trouble.
Yeah, security is a
Um,
watchword here. You mentioned energy security, job security is another one. You've had the emergence of the gig economy and things like that. I think that needs to happen. Otherwise, you're going to have a lot of unhappy people, as you said. Housing security, that's what, people feel safe in their homes, all that kind of good stuff in terms of they're not going to be thrown out on their ear or, they're one paycheck away from living on the streets, all that kind of thing. And we're confronted by that, as we all have seen the massive increase in homelessness. It seems to me, I haven't got the stats in front of me, but I think we could agree both. And I've seen this in the US as well as the UK. Things like that where people are confronted by this on a certain level. So yeah, we need to take all of that into account and see how we kind of move forward with a plan for the 2030s rather than the 1930s. But yeah, it's going to be really interesting, and we need a plan, right? That's the thing. That's what we come back to.
yeah,
Our thing is, what's your plan? What's our plan in light of this?
yeah. I think
Mm.
there are individual kind of tips we can dish out here. I think that the core thing is you're right is take into account all this stuff that's going on in the world and have a plan for what to do about it. Like basic stuff like having a rainy day fund, obviously, but then there are other things that are becoming more prevalent now. Stuff like income protection is coming back onto the scene a bit more. If there's more uncertainty out there in the economy, and you want to guarantee, you've got a mortgage to pay, you want to guarantee, if you lose your job, what's going to happen. Well, there are actually financial products out there for you. You can get things like unemployment protection and that kind of thing now. They're not crazily expensive. Can give you that kind of peace of mind and that kind of thing. There are solutions available to people. Obviously, we try and cover more of that as we go along on Mouthy Money. But the basic thing is, as you say, Chris, is don't just sit there and worry. Just do something about it. Make sure
Yeah.
that you don't have to worry, or at the very least, you have in your mind. And I've even had this conversation with Ellen about, what do you do in these kind of scenarios? And the first step to solving our problem is just talking to people about it who
Mm.
matter and
Mhm.
making sure that it doesn't come as a big shock and you have no idea what to do. That's the worst thing that can happen
Yeah,
ultimately.
100%. I completely agree. And that's the thing. First things first is talk about it, understand what's going on and talk about it. And then, like you say, then you can start to make certain decisions in a direction which is going to give you more headspace, more room. Or on the flip side, it might present an opportunity for you if you feel that you're certain about a certain direction of travel with something, when it comes to investing or anything else like that. So it's not all negative, but you do need to have an idea and be comfortable with your decision making process. Going back to what I said about my friend, it's like, okay, know who you are, know what your priorities are, know what the reality of those situations are likely to be in the next 3 to 5 years. And with that in mind, how best can you orientate your money to make sure that you achieve the things you want to achieve with it? As simple as that.
Yeah,
And that's where these conversations help it. Bit loud budgeting. We talked about it before. Don't be afraid to say, I don't know, or don't be afraid to say, this is what I think and how should we go about it? So more of that, the merrier. I think, particularly now, we do need to,
yeah.
think about it and work out where our loyalties and our priorities lie.
All right, Chris. I think that's about us. I think we really put the worlds to right in the podcast today. So thank you
No problem.
for joining me
My
on that
my
journey.
pleasure. My pleasure. I'm going to go and check my portfolio again.
Please don't. Just go and have a cup of tea, mate. You'll be
All right,
fine.
I'll make a cup of
Yeah.
tea and then listen to what Keir Starmer's going to redraw the end of
Yeah.
globalization. Well, let's see what's in
Don't
store.
worry,
That could be
Chris.
fun.
He's going to tell you that everything's going to be okay.
Well, that's
That's all
good.
you
I'm
need to know.
reassured. I'm reassured. Yeah.
All
I
right.
look forward to next week's podcast where we work out what the new world order looks like.
Exactly. Right. Lovely. Thank you, everybody. Thank you for listening as ever. We'll see you again soon. Thank you and goodbye.
Don't forget to subscribe to the show on Spotify, Apple Podcast, or YouTube. You can also follow all our latest updates on TikTok, Instagram, or X. Finally, check out all our money stories on the Mouthy Money website and subscribe to our weekly newsletter for all the latest straight to your inbox. Thank you and goodbye.